All righty. Lots of interesting things to take a look at, I thought, today on Thursday, October 17th of 2024. We can start with the stock market. Obviously we came in this morning and Taiwan Semi, which is one of the bellwethers to the whole AI thingamabob, blew out earnings and we came in and the markets were way up. And from the get-go, they went straight down. And this is one of the things we talk about. You don't want to go with that early, right? It's like, oh, the market's failing on the back of good news. Well, it's early. You have to really wait for the close. The close is the single most important data point there is. If it had closed down on the day today, would I have called that a news failure? Yes. Would I be able to get short? No, because the market, from my data, is not long enough for me to get short, but it certainly could have been called a news failure. But we ended up closing up, so it's not a news failure, although obviously way off highs. And I would say that, we're not really in a market regime here where we're going to get a lot of gap and goes because the market simply just isn't short enough for that to happen, right? What you want is people to be super short. You get some good news and then it can rip and it can run. It can gap and run. We're not really in that. We know that, right? People are at the very least leaning long, in the COT data. And certainly a lot of the other data that we look at, cash on the sidelines and accounts and percentage of, wealth that's tied up in stocks right now. All these numbers are getting a little bit frothy. Although I would argue the one about how much is tied up in stocks has a lot more to do with how much the stock market has gone up, rather than how much more money people have put into it. But having said that, these are somewhat frothy numbers. So the odds of a gap and go are low. And you don't want to get sucked into that first move down. It happens all the time. That'd be my first observation. The second thing is we talk a lot about time periods during the day that are important. 10 o'clock, 12 o'clock, 2:30 as potential sort of turning points. And there's more to it than that as we look at the various relative performance across the indices. But in general, those are important times. Well, look, here's 10 o'clock. Here's 12 o'clock. Here's 2:30, right? Now, usually I would have expected 2:30 to be the low and had it gone back up, but it didn't. It actually took out that low and then sort of did nothing. But in general, those are very many times, including today, very important sort of turning point times to watch out for. So this was a good example of that today. So that was kind of the stock market. Some interesting stuff in the energy markets today, in a similar vein. This is heating oil. We had bullish news in the energies today, okay? And this was that bullish news right here, ripped higher, right? Now, I am still long some of this heating oil. And what I like to say is I was hoping for negative news. I like negative news to come out for things that I'm long because it helps me, gauge how the market can actually trade off of that. If it can trade well off the negative news, then I feel a lot more comfortable about my trade. And also, negative news comes out, people chase it, and those are like weak shorts. I like to have a lot of weak shorts in something that I'm long. But what happened here was we got weak longs came in, right? The news came out positive. Okay, people chased the news, and they immediately got nailed. And it was interesting because they got nailed, and then it just kind of did nothing. And then there was like this huge thing here. It went right through the day's low. And there must have been, it was like stop hunting, right? Whole bunch of people got stopped there. And as soon as they did, it rallied right back up and then followed through and closed up. If you had come in and looked at the close of the day, you'd be like, oh, heating oil was up today, as it should have been. There was bullish news. But if you really look into it, no. But I like this for a number of reasons because this was sort of a panic. And we've all been there where you've gotten stopped in a panic and you regretted it, right? You low ticked it. We've all been there. And the market has never gone back to those levels again. So I kind of like that. What it allows me to do now is look at this level and be like, okay, if that was a panic and it should never be hit again, I can move my stop up here to this low, right? It should never be hit again. So if it's hit, clearly the market's bad and I can just get out, made a little bit of money in the trade, be happy and walk away. So I thought that was kind of an interesting day to look at and think about in the energies. As far as everything else, the metals didn't really do very much. Upsy, downsy, upsy, not a lot. And the bonds, got crushed. there was some stronger than expected data, and bonds got crushed. The data was kind of here-ish. Well, actually, it was here-ish. The bonds were getting crushed coming into it, and then it got worse. And with that, the dollar went up. Now, I personally have a position in this Aussie that I'm short and have been short. The Aussie was up today because right here, there was some strong economic news out of Australia, much stronger employment report, which obviously indicates less chance that they're going to cut rates, which means higher interest rates there, which means Aussie could be stronger. And that's fine. Sometimes you have a position and the news goes against you. But truthfully, the Aussie really didn't do very much. I mean, this is where the buying was, and it really didn't follow through. I mean, it came off, things kind of came back, but it closed lower than really this whole panic buy after the news. So that could be seen as a good sign. You could also argue there was dollar strength across the board, and that's why the Aussie really didn't get a chance to take off, and that may be true too. But I thought that was sort of, at least for now, encouraging as a short Aussie person, that it didn't really rally that much, and it really didn't follow through post the number, which I thought was a positive. Or negative, depending how you look at it. And the last thing I will address is this China situation, which I think is really, really important to keep an eye on. Even if you don't trade China, even if you're not involved in the whole thing, the lessons that are going to come out of this are going to be worth a lot in the years to come. This right here was the day after Chinese New Year. And during Chinese New Year, all we heard about was how people were lining up to open up brokerage accounts, and all this Chinese money was going to pour into the market. And that was the high, at least to now. That was the high. This is the FXI, which is the Chinese large cap ETF. That was the high as of now. And I'm not saying that it can't go through the high. It could. It hasn't gone through the low, which is all the way down there. But if it does, it's going to be super interesting because, as I've said many times, this is the world we live in. We live in a world that counts on the fact that should things go bad, these governments are going to come in here and support it by printing money and doing whatever they do. And that's what China did. And it worked, but will continue to work. And if it doesn't work, if it goes through the lows, what are they going to do next? They're going to have to try and do something again. But if it doesn't work anymore, there could be a problem, right? And this could be, if we go out and take out the lows, this could be an indication that there is a problem, that it's not working. You had people in China losing a lot of money on their real estate. And now they all lined up to throw whatever money they had left into this free trade in the stock market that the government was giving them. Well, what happens if they now lose, 30, 40% of that money too? Then what? Right? Now they're losing their real estate. Now the rest of their money they're losing in the stock market. It's going to be a problem. So I think that it's very worth continuing to pay attention to this. We hit new lows in this FXI today from the highs. It's down almost 20% from those highs. So the people that lined up during Chinese New Year, all excited about all the money they were going to make, are down 20%. So it could potentially be a problem and very much worth paying attention to. Okay, so those are my general thoughts on today. A lot of interesting lessons, I think, in here today. A lot of things to be keeping an eye on, and we will continue to do so. Hope everyone's doing well. Please like the video if, in fact, you liked it. Happy to hear questions and comments. Please check us out on crowdedmarketreport.com. Check out our other YouTube videos. Check us out on Substack. We have some free stuff. We did a great interview this week with Mr. Larry Williams that is definitely worth checking out as well. And that's about it. Jason Shapiro out.